All right, gang, welcome to Blockchain Cartel's first market update for blockchain, Bitcoin, and the entire overall crypto market. It is November 30th, 2021. Before we get started, I'd like to remind everyone we are not investment advisors, nor can we provide investment advice. Investing in crypto is very, very risky. Crypto investments can drop value very, very fast. So with that being said, let's get right to it. Hey, the first thing I want to do is give you the overall view of what's taking place, what is driving our investment thesis, why we're working and focusing strictly on crypto investments right now. All right, first thing I want you to see is the S-curve adoption. So basically what the S-curve adoption is any time that innovation in new technology, game-changing products, devices, or ways to do things is introduced into the market, it takes a number of years to diffuse it and penetrate the market. So what people that have observed this have been able to do is they've fashioned it to where it actually, once they chart everything and see how it flows, how quickly it's adopted, it takes the form of an S. So that's why it's called the S-curve of adoption. So the curve actually provides a pretty useful way to break down all the different customers or investors or whatever is being introduced. It can be broken down into 5 segments. So you've got innovators, early adopters, early majority, late majority, and laggards. All right, so innovators in Bitcoin paid handsomely for their risk. I'd like to think, this is just my own opinion right here, not anyone else's, that we're somewhere in this early adopter phase. So the early majority folks typically wait, they lay back. They need more evidence that this is the new innovation is going to take hold before they jump in. And then, we get the FOMO guys, the late majority. So they always are the last ones to push something up. Then, of course, we got the laggards who sometimes just completely refuse to adopt it and are in denial for the whole time. All right, so that's the S-curve of adoption for what I believe is taking place in the crypto markets. It is the underpinning for our thesis on focusing on crypto investments. I've missed several things that have come out in the markets over my 40 years of trading. I'm not going to miss this. So if we're right, then we're going to ride this baby all the way up. Now, don't think that it's a straight up shot. It is not. How many brutal bear markets has crypto encountered up to this point? A lot. So just keep that in mind. All right, so next thing I want you to take a look at is the cycle, the Bitcoin cycle. I want to put that into context for you. So what I have here is I've got the previous Bitcoin halving dates depicted with these red vertical lines. And here are the prior dates of where the halvings took place. So these longer arrows on the bottom here, you can't see the ones back on the first cycle when Bitcoin started. But this shows from the Bitcoin halving to the bear market low in that cycle. Bitcoin halving, bear market low. Bitcoin halving, and we haven't really had the bear market low yet. Okay. Up here, Bitcoin halving, Bitcoin top. Bitcoin halving, Bitcoin top. All of these arrows, these 2 arrows are the same length. This one's a little shorter. The one back here is shorter still. All right, so my argument is for a variety of other reasons is that we potentially could see an extension to this bull market. I mean, you can see here these arrows, same length. I just copied and pasted and moved them up here. They're the same length at the high right there. But my belief is we still have more left in this bull market, and I'm going to show you that in another slide. Anyway, I wanted you to see the cycles, visually see that, and then kind of where the peaks and troughs occurred during those cycles. All right, let's move to the next. All right, so here is where this is kind of a couple of these models up here, plus a few other on-chain models that I look at frequently, are the driving factor behind where I'm planning on taking profits. Now, I'm a trader by nature, so I have to play things that have happened in the past, that have repeatedly happened in the past. I have to continue playing those until they stop working in the future. Now, I don't have prior to 2017 here in this chart. I didn't want to scrunch it all up, but every Bitcoin top stopped in this upper red zone. Okay, this is a logarithmic scale curve. It starts out very steep, and then as markets mature, get older, it gets flatter, kind of like what we're doing now. All right, so these other horizontal lines you see here, that's the stock to flow model. Here you see the two lines there. You can notice every Bitcoin top is topped out between the two lines. Okay, right in there. We're nowhere close to it yet. What I'm looking for up here is for Bitcoin to get up into the 107 to 140-ish area, and that's where I'm going to look to start taking profits. All right, so next week I'll be adding some more things to this to show you other corroborating evidence of where I think the Bitcoin market will stop. But this is a very good place. Conservatively, low end is what I'm looking for. Blow off up in this upper area right here, which is around the 190 to 240 area, upper area right there. Okay, daily time frame, where we currently are, trend line intact from this July low, September pullback, so we're still good there. We got heavy support at somewhere around 53,000 in Bitcoin. And then all we're looking for is we're waiting for Bitcoin to flip and close on a daily basis above this downward sloping trend line. All right, a close above that, and it could be violent out of there, I have to tell you. It could be very violent to the upside. I mean, you could easily see a $10,000 bar racing out of that triangle, right, or that above that trend line. So anyway, that's kind of where we're set. My assessment of the market environment is that we are bullish, that we still have room to run to the upside. I think Bitcoin's got at least a double from here to get to the top on the lower end, possibly higher. And long term, I believe we're in a secular move that's that S-curve is going to replicate, and given several decades, 10 to 20 years, I think that S-curve, where we're at, will look a lot different than it is now. All right, with all that being said, here is our narrative based off of what I see for the S-curve adoption, the cycle that we're in, and some of the models that show the logarithmic curve and the stock to flow model. Number one, I believe that legacy stock markets investments are dying. The models, and that's S&P 500 products, your 401ks are in 60% stocks and 40% bonds and that kind of stuff. I think that's dead. That's just behind us. So Bitcoin will outperform legacy investments going forward. That is our pitch, and so you can continue investing in here, or if you've drink the Kool-Aid and figure out that Bitcoin is the way to go, blockchain is the wave of the future, you could simply buy Bitcoin and add that to your investment mix, because there's no doubt in my mind it's going to trump legacy stock market investments going forward. Or if you want to do a little more work, follow us. We believe that strategies focusing on low-cap crypto gems and blockchain tech will absolutely trounce the market, trounce Bitcoin. So buy Bitcoin, hold it, or you can get higher rates of return by investing in low-cap crypto gems. This is where we stand. This is our wheelhouse. This is what we focus on. And I have reams of data to show that Bitcoin is outperforming the S&P, and that strategies focusing on these low-cap gems are absolutely trouncing Bitcoin returns. So anyway, that's it for Blockchain Cartel's first market update. Glad you tuned in, and this is El Jefe signing out.